Hello, this is Dale. This is my stock market, both long and short-term outlook. Today's date is May 14th, 2022. The last time I put out a video on this subject was April 1st, at which time I was saying that the market is due for a retreat. Since that time, the market has gone from, the Dow has gone from 35,000 to 31.5 thousand, and that's a 12% drop. And what I do is look at three indicators to tell me what the market might be doing in the future. I see a turnaround now. I see a possible move to the upside. A lot of people are saying, no way, no way. Well, a lot of people were saying no way on April 1st when I was saying the market's due for a little drop. Today, I'm looking for a little bit of up movement. This might not occur in the next day, might not occur in the next week, but sometime soon, all the indicators say that the market will strengthen a little bit and move up. Again, my name is Dale Brethauer. I've been a trader for greater than 4 decades. I am a hedge fund manager. Currently, I'm the founder and stock options coach. We specialize in credit spreads at www.optionsinfinity.com. Every time I see a trade in a credit spread, I send out alerts to all my members. And then every other week we get together and have a members meetup where I teach a webinar for about an hour on Tuesday afternoon. These are always recorded. I think we've got the very best educational website available today. Hope everybody takes a look at that website and becomes a member for us. Let me talk about the three indicators. It's a very simple strategy. I think these indicators are very powerful. We look at the regression channel, measured moves, and Fibonacci extensions. In the regression channel, the regression line is calculated by taking 50% of the price above and 50% of the price below. So it's a great trend line, this regression line. Once the regression line is established, you can put in statistics to give you plus or minus 1 standard deviation and plus or minus 2 standard deviations. If you look at the standard deviation bell-shaped curve, you can see that a plus or minus 1 standard deviation is going to contain 68.2% of all prices. Plus or minus 2 standard deviations will contain 95% of all prices. This is a great tool to know when something is overbought or oversold. The other indicator I use is measured moves. A measured move is a bullish measured move is one that moves up, pulls back a little bit, makes a higher low, then makes a higher high. That's the classic definition of an uptrend, higher highs and higher lows. As long as we're in this kind of a movement and you get more measured moves in the upside, you continue to have a uptrend. Just the opposite is true for bearish measured move. Moving down, it comes up, it makes a lower high, then a lower low. This is the classic definition of a downtrend. This gives you a good indication once the market is either overbought or oversold that it is turning around and it's time to get in position to look for a change in the market. This is an example looking at the SPY, the Standard & Poor's 500. You can see how the market dropped and then it came up and it made a higher or a lower high, a lower high, then a lower low, and then it went all the way down to the 127. The beauty of the Fibonacci's, it can tell you when a move is overextended. So a lot of these three indicators are saying that you know, we're either overbought or oversold, or the move has a little bit overextended. Here's a move to the upside where we had a move up, pulled back, made a higher low, then a higher high. That's a classic definition of an uptrend, and up we go. Now, once you have measured moves, you can apply Fibonacci's to those. Fibonacci is derived a number sequence where we took the previous number and added to the current number, and that gives you the next number in the sequence. So 3 plus 5 is 8, 5 plus 8 is 13, 13 plus 8 is 21, and so forth. Then mathematicians looked at the square and the square root, and then we looked at the reciprocals of those. And these are used for extensions. And it's amazing how accurate these are in predicting when a move is overextended. You can see Fibonacci's throughout nature, so it makes common sense that you see it in the market, which is fueled by fear and greed. Now, with those three indicators, let's go ahead over to Thinkorswim and take a look at the current market. And you can see that on the left-hand chart, I've got the SPY, and this is a longer-term chart. I have 1 year week where every bar is a week. And then on the shorter term is the 3-month daily. You can see that back here around 4/1 is when I put out the first outlook, saying that I'm looking for a little bit of a pullback. And sure enough, we came down, made a measured move, and from there I was able to put in the 127, the 161, and the 261. It came down and hit that almost to a tick. Not only that, the market is down to the -2 on the 3-month daily regression channel. Remember, 95% of all prices is contained within this channel. The market has been extremely weak. Yes, it has. A lot of negativity out there with the Ukraine-Russia war, with the coronavirus still having some outbreaks, new variants coming along, and of course the FOMC raising interest rates. Now, the interest rates are still hovering around 1.5%. Well, until they get around 4 or 5%, the big institutions have nowhere really to put their money other than the stock market. So my long-term outlook on the stock market remains bullish. You can see that the regression line longer term is up. Even though we've had a big down move for the last 2 or 3, actually 4 months, the regression line is still up. I remain bullish, basically because the big institutions need to be invested in the market. There's nowhere else they can get the kind of returns that they need to give to people to have them continue to invest. Now, in the shorter term, I'm also looking for a little bit of a rebound here, basically because we had a measured move to the downside. Remember, here's where I was saying I think it's going to have a little bit of a drop. Well, that was based on a move from the -2 up, made a measured move. There's a high, there's a higher low, and there's a higher high. And I put in the 127, so it pushed through the Fibonacci 127 all the way up close to the +2, and then it started to have a little weakness. This is when I said I think it's time. I think it's a little bit overextended, and we'll probably have a little bit more of a drop, and sure enough, we did. Now, I think we've had a big drop. It's all the way down to the Fibonacci 261 and the -2 on the regression channel. My outlook for the short term on the market based on the SPY, the Standard & Poor's 500, is bullish. Like I said, is this going to happen tomorrow? Is it going to happen this week? I don't know. I don't have tomorrow's newspaper, but I do know that we're probably pretty much overextended and due for a little bit move to the upside. Now, at the end of this video, I'm going to have a subscribe button. If you haven't already subscribed, please do so. And I'm going to set it up automatically so that if you are a subscriber, you will get a advanced alert notification when I put out my next video, when I see the next move occurring. So please subscribe. And also I'll put on a video where I just profited on a very profitable trade on the RUT, a bear call credit spread that took advantage of this drop. And during this latest drop, we made a lot of money on a bear call on RUT. Thanks for joining me. I hope you enjoyed this video. Bye-bye now.